Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 3rd of November, 2023, and we had a huge move in the market this week. I, for one, didn't expect it. We did come down to the anchored volume weighted average price from the 2022 low and closed there just below it on Friday. But from the start on Monday, we gapped higher and then never looked back. It was a pattern of higher highs and higher lows. I was a little reluctant to accept that we were going to definitely have this type of rally. Because that 5-day moving average was still declining. As you know, that's one of my primary intermediate term gauge. So by the time the Fed came around and we were up in this area, I thought it was a little bit stretched. I was able to squeeze some money out of it, but I, for one, definitely underperformed this week. The S&P was up close to 6%. The NASDAQ was up greater than 6%, with the Russell 2000 up 7.5%. Biotech's up 11% this week. So again, just a monster move, and mainly from places where we've seen underperformance. So now that we've had this big move, what's next? Just because we might have missed a move or missed out on the bigger opportunity to make all that big headline money doesn't mean there aren't going to be opportunities in the next week ahead. Right now, the S&P 500 today came up to the anchored volume weighted average price from the year-to-date high. So that's that red line. Is that going to be resistance? Well, as you know, I always talk about levels of potential support and potential resistance. I refer to them as levels of interest, such as the level of interest over here last Friday was we were down to that anchor, but I wasn't going to be a buyer because we were still making lower highs and lower lows below the 5-day moving average. Now we're at a declining 50-day moving average in the anchored VWAP from that peak. Maybe we do this. This is certainly a possibility that we continue up through this level. I didn't mean to draw it like that. Let's just get a straight line across there. Maybe we continue up through this level and then start to begin our pullback. All I know is just because we're at this level doesn't mean I want to sell it short. And I don't necessarily want to short a pullback because we'll still be above a rising 5-day moving average. So let's say we do something like this into next week, and then we see a sharp sell-off, maybe a little bit weaker, that 5-day moving average comes back up, and then we'll look for some reemergence of strength. We'll put an anchor off of this, and perhaps that's how it comes together. Going back to the inverted head and shoulders pattern we spoke about a week or so ago, this, we break above that level, people will say, hey, it's going to, or maybe just go close the gap. A gap closure would be a perfect place for this market to then begin to sell off and then reload for the next move up. The thing is, it's okay to miss moves. As long as you're not positioned short during something like this and adding to a short or initiating short positions, that's where the real damage gets done. To be on the sidelines or to be involved in a smaller way, you can't beat yourself up for that. No one gets all the moves all the time. I know I certainly don't, and this is a great example of that. And I want to point that out and be frank about it because the way I look at the market didn't allow me to get aggressively long. Sure, I look at it and say, I wish I was aggressively long, but according to my rules of risk management, it didn't seem prudent. This did not seem like a realistic expectation this week, a 6% move in the S&P 500. So rather than argue about it or, talk about what I could have done differently, because when I look at it, I truthfully wouldn't have done anything differently because the risk to reward ratio didn't fit my parameters. And that's part of following a process or a system, is that you're always going to be missing out on some move. For me, over the last 3-4 months, my account has been slowly going up to the right like this. I've been making good little profits on the short side and the long side, but I didn't get a nice equity bump this week the way a lot of people have. But a lot of those people are still maybe just getting to break even. Certainly they're at break even from the high of this year, the average participant from there. So keep it realistic. Don't listen to other people on social media who are, try to feed that FOMO in you and tell you that you're underperforming and, you need to be more like them. Stick to what you know. And by the way, this is all just for informational purposes only. These are my opinions, nothing else. Make your own decisions about the market. I'm not here to provide financial advice. Just look at technical analysis and how the money flows in the market. That's my specialty. The NASDAQ, as we know, also had a monster move. It blasted past the 20-day moving average. It blasted past the 50-day moving average. It blasted past the anchored VWAP from that prior peak. And it's up through the anchor from this year's high as well. So these things aren't useless. You can't look at it that way. The proper way to use a moving average, to use an anchored VWAP, is not to say, I'm going to take action at that level, but instead to say, I'm going to really get more focused, more interested at that level. So yesterday when we closed here just below that 50-day moving average, the trend was clearly still higher. I had drawn this line in saying this is a potential level of resistance. It had been resistance here, support here, potentially resistance again. But the market gapped up today, and I always say only a fool would get short there because it's a potential level. It's not a real level. We only know support after the fact. That's what I've been saying the last couple of weeks. And now we'll only know resistance after the fact. So we look at it and say, what has been important to this market before? Well, we had this high, we had a lower high, and a lower high would come in right here. We also have, don't forget, this is right now so far, it's a great bounce, but it's a bounce in a downtrend. What's the definition of a downtrend? Lower highs and lower lows. Lower highs, lower lows. That's what we have in the NASDAQ. That's what we have in the S&P 500. It doesn't mean it can't turn around, but we have lower highs and we have lower lows in these markets. So that's one time frame's definition, right? On the daily time frame. If you look at the shorter term time frame, we have a beautiful clear pattern right in here of higher highs and higher lows. What we want is for those to be in alignment. So maybe the NASDAQ starts to pull back like this, and then in a week or two's time, we build some energy and bust through that level. That would be my preferred scenario. I'm going to trade what unfolds in front of me. I know that it's great to see that, most people say, well, the market can't survive if Apple's going down. Apple reported earnings and their stocks sold off. But guess what? It didn't slow down the market at all. It's a market of stocks, and oftentimes a big one will have an impact. Look at this one. From failed moves come fast moves. We say it all the time. And here we just slightly undercut that 2022 low. And it did, in fact, turn from there. I talk about how this had the potential to be a place to turn from. And maybe getting above here, it would have some strength. I really wasn't interested in buying it because I thought, well, it'll probably rally up towards that 20-day moving average and find resistance. So instead, I missed out on this move. I missed out on today's move as well. I think a lot of people, though, who are participating in this move are participating on the wrong side. In other words, there's a lot of people getting short squeezed in here. And if this market is going to act kind of normal, maybe it pushes up through this level a little bit and then starts to digest these gains and do something like this, and maybe then a shakeout to doubt people. And then perhaps it finds buyers along the rising 20-day moving average. And then that 50-day moving average flattens out in a couple weeks, and perhaps the Russell 2000 will lead us into the end of the year. The evidence isn't there yet, but we always have to keep an open mind and say, just because it's been garbage from that July high straight down to this new low for the last 21 months, doesn't mean it can't now turn into be a winner and even maybe a leader in this market. Again, no indication that it is a leader, but we have to keep our mind open and say, what potential scenario, and then how could I participate in a low risk way and have a reasonable place for a stop, buying above here with a stop above at that level. The 5-day moving average will probably come and look like this. This is what we would have happen. And then we get back above that 5-day moving average. We would put an anchor off of this peak right here. That anchored VWAP would look like this. We would put an anchor off of this low. Perhaps this little pullback comes down and touches that. Those are the scenarios that we want to see ideally hold. And again, they're not meant as a blueprint. They're meant as start to think logically about how money flows through the market. Semiconductors came down. A lot of people say, well, they found buyers at the 200-day moving average. Did they find buyers at the 200-day moving average, or did they find buyers and bottom at the year-to-date anchor? I don't really care which one you choose to believe, but I will say this, that earlier this year, the 200-day moving average for most of the year has been completely irrelevant to what's been happening in the semiconductors. But if you look at the anchored VWAP from the beginning of the year, that has been much more important. I put more emphasis on the volume weighted average price than I do the 200-day moving average. And I think this is a great way to see that right here in this market. So massive rally here. Again, I said, what was this? This was 8.1% for the week. Just a huge move. And it's possible it can continue. It's possible that it will go break this pattern of lower highs. But would that mean we're beginning a new uptrend? Not to me if we broke above there, because what we also need is a higher low. So we need a pullback where maybe it pulls back all the way down to here and then starts to rally. Well, then we've got a higher low. I would want to be a buyer in here with a stop under there, assuming that it's going to find the strength to go rally up and make another new higher low. Maybe it falls in here, finds buyers near the 20 and 50-day moving average, and then gets going. That certainly seems reasonable to me. So maybe it comes down like this for a couple days next week, finds buyers along that 5-day moving average, something like this, maybe crosses below it for a day, day and a half, and then put an anchor off of this high if this is the high. And that's the big assumption is maybe Monday we see another big move up, and then we're going to have to measure that VWAP from a higher high. The point is, though, it's the way that these markets tend to move, and we want to be ready for those scenarios. Biotechs had been, my line for these the last several months has been biotechs continue to do what they do best, which is to destroy equity. This week, they did that for the short sellers. The biotechs gained 11.4%. Huge move in there. Still clearly in a downtrend. We've still got a declining 20, 50, 200-day moving average. So we want to look at it and say, where does this potentially run out of steam? Well, we had a prior band of support in here, which turned to resistance before that most recent sell-off. We can take a look at the anchored VWAP off of this peak. We're right at it. Maybe off of this peak if we continue to move higher. We've got a declining 50-day moving average. I don't want to short at any of those levels. I only want to short if I'm inclined to short if it does this and then gets trapped below the 5-day moving average. So let's say it does this and the 5-day moving average starts to flatten out, breaks below here, stop above there, and then if it continues to ride below the 5-day moving average, great. And if it does this, that would be time to cover that short. That's the way the cyclical flow of money through the markets in these different markets. The financials came all the way up, and they even got through that high. So we had a higher high. Does that mean that we're in an uptrend? Well, in the shorter term time frame, absolutely we're in an uptrend. We gained 7.3%. So just as soon as excuse me, just as soon as people were saying the markets are in corrective mode, and if you recall, there was also the in particular for the financials, all the talk about what the bearish what do they call it? The bearish 50-day through the 200-day moving average cross, the death cross. Well, where did that death cross occur? Basically on this day right here. So if you sold that day, where are you now? Well, you're losing money. I think we saw that also in, where else did we see that? Maybe it was the financials I was thinking of. Either way, we don't listen to those bullish and bearish crossovers. Crossovers mean indecision. They're certainly not meaningful to a swing trader, which is what I am. And based on, in the basis of all of my comments here are around a swing trader time frame. Maybe we do this. It doesn't seem likely. So I want to look at it and say anything is possible in the market, but what's most probable? And then when I look at that, what's most probable, how much am I willing to risk? How much do I want to bet that probability is in fact going to come true? Because if I'm wrong, I don't want to just get crushed and give all my money back. Instead, I want to say, what's a reasonable amount? Where do I admit the market is wrong? Where I admit the market is wrong, if I was short, would be over here. It made a higher high. It doesn't mean I would expect this to continue to rally. But at that point, I'd say it made a higher high. It's time to get out of the short. Now, over here, same thing. If we start to make these lower lows higher, then this uptrend is now in a downtrend. Know your time frame. That's the most important part. The energy stocks continue to find buyers at this horizontal area at 85-ish. And that is the last time we were here. That was the year-to-date anchor in the 200-day moving average, and it still is. So this is an important level going forward. If you want to be long, expecting maybe oil's going to rally, it's clear to know where your risk is. If you're an investor, your stop probably goes underneath these two lows. That's all I have for now. Have a good weekend. Hit the like button if you would, please. Everyone says, I hear YouTube videos all the time, smash that like button. It helps the algos. Have a good weekend.